In this video, we will talk about the rumored merger between Cciv and Lucid Motors, the recent price movements, the hints of this merger, and if you should buy its shares. The share price of Cciv increased over 300% in a month, from $10 to almost $40. This price surge was due to rumors that it was going to merge with the EV company Lucid Motors. Many investors are excited about Lucid because the company has a vehicle called Lucid Air with very performant capacities and can rival any high-end EV vehicle currently on the market, including Tesla. But beyond the surface, I think that investors are also inherently excited about the third major EV startup to go public, because historic data shows that the third one will either become the largest one or that it will at least become a real competitor in the sector. A typical example of this phenomenon is Facebook. It was not the first social media, but it learned from the mistakes of the previous ones and became the biggest social media network ever since. This, combined with the ongoing EV frenzy, had many people speculating that Lucid Motor will grow to a much larger company once it goes public, much like Tesla and NIO. When we look at the circumstantial evidence around the possible merger, I believe that we can see some very interesting hints. According to the rules of the New York Stock Exchange and Nasdaq, if there are rumors regarding significant matters regarding two corporations, such as merger, the companies that are concerned must clarify the rumors, especially if they are false. At this moment, the one company that is publicly trading is Cciv, the SPAC blank check company. From a legal and ethical perspective, it has the obligation to deny allegations. The founder of the SPAC, Michael Klein, has never publicly denied those rumors. This means that at the very least, there have been talks between the startup and the SPAC. Another hint is the recent announcement that Venrock Capital, a very early investor in Lucid, plans to sell its shares to Cciv. This may have an influence on the company's valuation, depending on the price that Cciv will be buying the shares at. Those circumstantial aspects all contribute to the probability that Cciv is currently in advanced stages of negotiations with Lucid Motors. When we look at the institutional shareholders of the company, there has been a significant increase in the amount of shares institutions hold. This can be another crucial piece of information in my views, because it means that they assume something great is cooking in Klein's kitchen, and that it will eventually turn out to be the merger with Lucid. With that being said, it is also important to state something very crucial against those positive outlooks. It is highly likely that at this point, the merger has been priced in at the shares of Cciv. People assume that it will take place, and this in the near future. Depending on what people perceive as near future, there can be negative rumors running around regarding the talks, and some market participants may decide to jump ship. Keep in mind that as far as the institutional shareholders are concerned, most of them entered in this trade when the share price was still at the $10 level. They have an unrealized gain totaling 3 times their exposure. At least some of them will be tempted to unwind this position and lock in the huge gains, especially if the talks will last another few weeks, during which those negative rumors can start circulating. The world of financial institutions can be a small world, at least small enough for those rumors to circulate rapidly and to influence the decisions of some fund managers. The other yellow flag from the start has been the track record of Michael Klein himself, the founder of Cciv. He is known for many successful SPAC mergers in the past, but he is also known for a few flops that have stayed bitter in some investors' mouth. Before we move on to my recommendations, if you like my content, please like, comment, subscribe, and check out my channel for more stock analysis videos. My recommendation is to enter in the trade if you don't have any existing position, and to hold your position if you already did. However, there is a huge caveat to this recommendation, and that is your own risk appetite. If you decide to buy the shares, you should be comfortable with tolerating the risks of the merger not going through and the profit taking on Lucid Motors shares. Both can be significant risks, but the more obvious one is the merger not going through. In that scenario, Cciv would reverse back to its price of a blank check SPAC, which is $10. Keep in mind that given the evidence we saw earlier, it is unlikely that this will actually happen. The second threat has higher probability in my view. EVs became a very hot sector back in 2020. And before that, the same companies that exist nowadays, such as Tesla and NIO, all had difficult periods of their own. People were even wondering at some point if NIO can survive, since it was having cash flow problems. If we look back at what happened to Hyliion, the simple fact of profit-taking triggered a dramatic price collapse, and the company has yet to recover. With that being said, with the risks also come opportunities. The opportunity is to get exposure in a company that can become the next Tesla, because it has a great product and it has a solid team behind it. The market dynamics in the years to come are likely going to be sensitive to EV companies. Any new announcement by Lucid, delivery numbers, financial statements, new cars, can be a great catalyst for the stock price to go higher. So, if you are willing to tolerate a fairly high degree of risk, my suggestion is to slowly build up a position and to hold it if you believe that this company has a great future ahead. Given that the company is still in the talks of merger and that Lucid is a startup, I would suggest a maximum exposure between 1 to 3% of your portfolio. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.